I invite each and every one of you to kindly join me in welcoming our esteemed panelists amongst us with a big round of applause. This panel discussion will be moderated by Shri Amarjeet Singh, whole-time member, Securities and Exchange Board of India, SEBI. I take the pleasure of inviting him up on stage with a big round of applause, ladies and gentlemen. And I request all our esteemed panelists amongst us to kindly join us up on stage. We have amongst us Mr. Anuj Kumar, Managing Director, Computer Age Management Services, CAMS. Let's give him a big round of applause and welcome him up on stage. We have amongst us Mr. Nithin, founder and CEO of Zerodha. He will be joining us in a bit. We also have amongst us Mr. Nilesh, Shah, Managing Director, Kotak Mahindra Asset Management. Thank you so very much for joining us, gentlemen. Please do take your seats. And with this, I invite Shri Amarjeet Singh, sir, to kindly take this discussion forward.
Good morning. We are waiting for Nithin, but I think we'll start soon. So, I welcome all of you for making time for this panel discussion. Honestly, I am not used to moderating panels. I am more on that side. Then we are used to moderating parties, by the way, as a regulator. But nonetheless, while we wait for Nithin, let me just set the context with some important data points. So the topic is mutual funds and how technology is reshaping it. So just a couple of data points. AUM, the asset under management of the mutual fund industry, has touched almost INR 65 trillion as on July end 2024. This translates to a CAGR of over 21% in the past 5 years. If you look at the geographical mix, again it's changing very fast. The share of AUM from B30, which means beyond 30 cities, as a percentage of total AUM, it has increased from 15% to 18% in the past 5 years. So which means more penetration is happening beyond big cities. Another important data point is the greater individual participation. Between March 2020 and June 2024, the number of unique investors in mutual funds has increased from almost 3 crores to 4.7 crore at a CAGR of almost 12%. Technology has made huge difference in various facets of the mutual fund industry. So Aadhaar-enabled KYC has accelerated the onboarding process, has improved access to mutual funds. MF Central platform gives investors integrated services, access to all their holding. And we also have execution-only platforms for making investment in direct plans of mutual fund schemes. And of course, we've always had that for a long time. The sports platform facilitates very speedy investor grievance redressal. It has also reduced, technology has also reduced information asymmetry, as we know. It has brought a level playing field and enabled investors to make informed investment decisions. So see, I have seen the journey of mutual funds from very early days, and it's a very, very impressive growth that we've had in the last decade or so. The industry has, if I can say, openly embraced change. And I believe we have a very powerful narrative to share with the rest of the world in terms of the growth of mutual fund industry. But we should not become complacent at the same time. We have a long way to go. We have a lot of scope for further expansion and penetration. And technology can definitely help. So let me, with that context, I'm not sure if we should wait for Nithin or let me just start with my other panelists and let him join as he comes along. Yeah. So let me start with you, Nilesh. And my question to you is on the active fund management side. To stay relevant in a rapidly changing landscape, active funds will need to consistently deliver on performance. Now the data shows that for a 3-year return period in case of direct plans, 40%, and it's a large number, of active schemes comprising 32% of direct plan AUM, they underperform the benchmark. And similarly for regular plans, we have a similar story. Underperformance by active fund managers vis-a-vis the benchmarks. So what innovative approaches will be required for the active fund management industry to stay ahead of the curve?
Thank you, Amarjeet Bhai and Fintech Convergence Council for having me over here. As a fund manager, I don't have a choice but to add value to my customer to keep my job. But do I add value every day or do I add value over a period of time? Now, 3 years is a reasonably long period of time, and hence there is no excuse for 32% of the AUM to underperform the benchmark indices. But Amarjeet Bhai, आपने शायद एक हिंदी फिल्म देखी होगी, अमर अकबर एंथनी. उसमें एक गाना था, अनहोनी को होनी कर दे, होनी को अनहोनी, एक जगह पे जमा हो तीनों, अमर अकबर एंथनी. तो हमारी मार्केट आजकल अनहोनी मार्केट है. इसमें अमर भाई जैसे स्टॉक है जिसके लाइक अपराइट पुलिस ऑफिसर, बिजनेस भी ठीक है, फंडामेंटल्स भी ठीक है और वैल्यूएशन भी ठीक है. सो एज ए फंड मैनेजर आई हैव गॉन एंड इन्वेस्टेड इनटू अमर भाई इक्विवेलेंट स्टॉक्स. बट इंडेक्स में अमर भी है और एंथनी भी है. एंथनी भाई दिल के बहुत अच्छे हैं बट थोड़े शॉर्टकट ले लेते हैं. There are stocks where fundamentals are good but valuations are expensive. In order to outperform benchmark indices, I can't go and invest in a PSU bank which is trading at FMCG company valuation. It's trading at FMCG company valuation because there is only 2% floating stock in the market. There are many such low floating stocks which we could have invested, outperform benchmark indices, but eventually, when supply would have emerged, we would not have generated sustainable return. So many fund managers have taken a bold call to stick to good business, good valuations over outperforming benchmark indices by investing into low floating stock counters which have sky high valuations. I hope eventually investors will appreciate that.
But do you think, just a follow up on that, if you take a longer term period horizon, do you think the situation will change?
I hope. If not, I will lose my job.
Oh, I see. Okay. So let me ask you a question on the, we hear these terms, data analytics, machine learning, AI. In the context of mutual fund industry, what do you see the potential of these technological tools? Are they overhyped or do you think there's some real value?
So one line summary, Amarjeet, by a fund manager or a mutual fund employee using AI is more likely to outperform a fund manager or an employee without AI. There is no option. Let's look at it from an investment point of view. If I input a balance sheet into Excel sheet and read through the pages, I'll probably take 2 days and I will still make error. Through machine learning, I can do balance sheet analysis in 2 minutes and I can be 100% sure that there will be no mistakes, I have no option but to use machine learning to analyze balance sheet. Similarly, if I have to communicate with investors, if I do physical communication, how many persons I will be able to reach? I have no option but to leverage technology so that I can reach out to many customers. And while there are so many people present today and standing, which gives me nervousness, normally ये market के top पे होता है, 25,000 निफ्टी पे लोग हॉल भर देते हैं, 15,000 निफ्टी पे कोई दिखता भी नहीं है. Let's hope and pray this time it is different. But limited point is that I have no option but to leverage technology to reach out to my customers for giving them right information. I have to today deal via technology for execution, which saves me cost, which saves me time. And finally, in servicing, again, I have no option but to use technology. The mutual fund model is operating at very, very low margin. In some of our direct mutual fund, expense ratios are 15 basis point, 20 basis point, 30 basis point. At that margin, if I have to operate, I have no option but to leverage technology. So whether I'm managing money, whether I'm servicing customer, whether I'm selling to customers, there is no option but to leverage technology and become more efficient.
Right. So let me turn to Anuj. So my question to you is on the mutual fund penetration. So we know that there are about 5 crores unique investors, but if you look at the 55 crore people who have PAN numbers linked with Aadhaar, there's a lot of scope for further growth apparently. How can innovation be leveraged to enhance mutual fund penetration and power growth?
Sir, can I just I'm sorry for interrupting, but Mr. Nithin Kamath has just joined us here. We'd like to welcome founder and CEO of Zerodha, Mr. Nithin Kamath, here amongst us. Pleased to join the panel, sir. Welcome, sir. Once again, sorry for the interruption. Please do continue, gentlemen.
Nithin bhai, welcome to Mumbai traffic. We survive that every day.
Good morning, Amarjeet ji. Thanks to SEBI and to the organizers for having me on this panel. No, I think it's a great question, and I'll divide my response in 2 parts. One is just about what I call demonstrated readiness. So you just said that it has taken the mutual fund industry close to 30 years to get close to 5 crore customers. We're still not in that benchmark, but hopefully we will get there. Last month, in the month of July, the industry registered close to 70 lakh SIPs. If I dial back 4 years, this number used to be about 15 lakhs. So we've seen a 5x scale up in just SIPs coming into the industry. If I benchmark the new accounts which go under the name of new folios, unique investor accounts, everything is multiple X for what it used to be 4 years back. When we register 70 lakh SIPs in a month as an industry, and most of these are registered by the RTAs, that number is close to now in the vicinity of 10 crore a year, and I'll not be surprised there'll be a year when we have 10 crore new SIPs coming in. There are of course fall-offs in the base, there is some attrition, etc. That net number is smaller, but the gross number is what we deal with. You don't just register the SIP, you make sure it is triggered in time, you make sure that the investor gets the right NAV for the right date, that the upwards of 200 banks, including small cooperative banks which may not have fancy banking softwares, which may not have UTR numbers in their bank narrations, where it is very tough to even reconcile whose payment you got and whose transaction you're matching it against. The industry has delivered almost flawless customer service. If you recall the last time you saw a newspaper headline in terms of things having gone wrong, whether for a single investor or a massive investor, I think that was a long time back. And now across our funds, across the scams, we have almost 45 lakh crore of AUM. The industry, of course, is north of 60 lakh crore. And those are not insignificant numbers. The reason I'm quoting all these numbers is not to kind of submerge the discussion in a welter of numbers, but just to suggest that 2 or 3 things have happened around us. One, of course, we must give credit to the industry and to the partner ecosystem, both the Fintech partners which have helped us scale in the last 3 or 4 years, but also the diligent man on the scooter or man on the bike who has gone from house to house, getting that single 50,000 or 25,000 rupee check after diligent hard work for a year or two. That has worked. Cheap internet packs have worked. Internet is cheap, very accessible. So it is the same YouTube videos, it is the same, the speech about investing or propagating mutual funds that Nilesh would make or Nithin here would make. It is accessible across the country to 100 crore people because they all have the same smartphone and they have the same cheap 100 to 150 rupee internet pack. And then once the man decides to enter, and I'll give you examples of cohort industries where these things have not been done. You can monitor your portfolio every day, every morning, every evening. We don't wait for anything. There was a feature in the industry that this used to work on a batch mode. Even as RTAs, we would wait till the evening. So there were two big times in a day. One was the cutoff time of the market. The second was the NAV arrival time. And we would wait for those things to happen before we gave you status. Today, everything has gone online. So all transaction acceptance is online, which means we have powered the entire mutual fund ecosystem. The smallest of distributors can access the API. It's not just transaction acceptance. When the transaction acceptor is sending an OTP to the investor, he needs to send it to the phone number in the folio. I give the phone number over an API, which means they may have some other phone number, 1, 2, 3, 4 in their records. But the OTP must go to 5, 6, 7, 8, and I give that. Similarly, when a transaction acceptance status is being asked for by an investor, he calls a call center or goes to an app, it's very easy for us to provide all of these things. So the entire ecosystem has been powered through APIs, digital non-financial transactions, multiplicity of digital conveniences in terms of accessing transaction capability, automatic bank reconciliations. All these things have been done, and I think the biggest thing is the movement from batch to online, which the industry has done. The result is the numbers that I just quoted, that we have demonstrated capability to take not just the 5 crore who've come in the last many years, but let's say God came himself and doubled this number in a year. Let's say 8 or 10 crore people came. I can say not out of bravado, but out of experience of having dealt with this, that this has been delivered by us, especially in the last 12 months, and we can continue to deliver it.
Right. So Nithin, welcome to the panel.
Thanks.
So Zerodha is not new to technology, and rather you are somewhat defined by that. So looking ahead, what do you think is the next frontier or the next big tech-driven disruption in the mutual fund space? Or maybe you are already working on something if you want to share that. Also, what kind of innovations, disruptions that you expect going forward, not just in the mutual fund space, even going beyond within the securities market space?
Yeah, thanks. So I think with the mutual fund space, I think the most important thing is simplifying the experience. As in, today you just have too many types of funds, and we are looking at simplifying it. For example, we have launched a bunch of funds which are passives and which are ideal for new first time to market persons. So essentially, what is required in the market is, just a second, if you can take something else. So once again.
So my question was more on, what do you foresee as the next big change driven by technology or innovation? Either specifically in the mutual fund space, or if we expand the canvas, the larger securities market space, broking, portfolio management, investment banking, and so on. The technology and the markets, essentially that.
So in mutual funds, the thing is, we believe that it's going to be passive first. because that's where technology can be really put into use. You don't have fund managers, and you can disrupt using passives. In passives, essentially what it works. Okay, just sorry.
No, it's all right. So let me simplify this for you. Supposing somebody in the audience, so I'm changing the question a little bit here, wants to enter the mutual fund space. Maybe somebody wants to set up a new AMC or be a part of the ecosystem through some other activity. Can technology innovation help a new entrant compete with big boys like Nilesh?
Yeah, I mean, technology can only solve for a particular set of problems, as in, because mutual fund today, you know, everything said and done is still a distributor of first model. Technology can solve for people who are first time to the market and who are looking at passives and things. So I don't think technology alone can solve for a lot of the market problems, but yeah.
Yeah, I get your point. So you're saying that technology has its own limitations. It can take you up to a point, and beyond that, there are many other things which matter. That's a fair point. So let me turn to you, Nilesh. Now, let's talk about distribution and advice. So these are two key components of our mutual fund ecosystem. And user-friendly, as we've seen in the recent past, user-friendly digital interfaces are already impacting these areas. How do you see the future of distributors and human advisors, not the robo-advisors, in this context?
So, Amarjeet bhai, there is a proverb which says that ki zehar zehar ko kaatta hai. And we will have to first leverage technology to disrupt technology itself. Today in social media, there are many influencers, quacks, which provide how you can become rich overnight. And this is resulting into misallocation of savings. For example, between FY21 and FY23, Indian households, collectively you, me and everyone, only invested 4 lakh crore in mutual funds and 2 lakh crore in direct equity, bonds, debentures, corporate FD. So total 6 lakh crore, 7% of their financial savings. They put 9 lakh crore in currency notes. There is a segment of Indian which believes that घर पे पैसा रखेंगे तो दुगना हो जाएगा. आज तक किसी ने देखा नहीं है, but belief है. There are people who are promising ये stock खरीदिए कल यहाँ पे पहुँच जाएगा ये वो. 89% of people who trade on stock market are losing money. Time and again it has been proven that there is no future in futures and options, but people still continue to dabble in the futures and options to lose their futures and close all their options. How do I convince these people that भैया घर पे cash रख के दुगना नहीं होता है, निवेश करना सीखें? So I have to leverage technology so that I can cancel noise and I can provide wisdom. Today knowledge is provided thanks to mutual funds, sahi hai, but knowledge alone is not necessarily wisdom. Then we need to reach out to people. Now in India, whatever one says opposite is also true. If there is a need for technology, there is also need for human touch. We are not just one country with homogeneous set of people. We are one country with heterogeneous set of people. There will be some people who still wants to fill application form, want to touch and fill. There is another segment of people who don't want to see your face, they only want to use technology. So my feeling is that we will develop a model which will have UDP restaurants also and 5-star restaurants also. We'll have to cover every segment of society through human touch, through human and technology, and through technology, so that we can ensure that Indians become financially savvy. Amarjeet, by 93% of savings allocation in financial household savings is into assets which are not producing real return. Bank deposits, insurance, pension fund, small savings, and currency notes. 93% does not give you power to outperform inflation. 7% आप invest करते हैं जिससे you can beat inflation. How can India become wealthy? Now, how do I reach out to this segment of people so that they can invest for better, invest for future? And hence there is need to use technology, but also retain human touch. In India, every model will work.
So you mean to say there is a place for everyone, including the robos, right?
Absolutely.
Right. So let me now move on to a question which I'll ask all three of you. Maybe we could start with you, Nithin. As the reliance on technology is increasing in our, investment life or regulatory life as well, what are some of the key risks that have emerged or that you see on the horizon, maybe not fully recognized as yet? And how can these risks be addressed at the AMC level? And any advice for regulators like us? So on the key risks, please.
Key risk is definitely the cyber security and all that associated with that is key risk. Another risk which doesn't exist in the passive AMC is like the fund manager risk, as in I'm sure for Nilesh that will be like a key risk as in terms of insider trading, etc. So the other thing is over-reliance on centralized systems. One or two parties going down can bring the whole ecosystem down. That's also a key risk.
Anuj?
So, just starting on this, I think the risks are very different when an industry has 9 out of 10 people accessing it through digital, compared to 9 out of 10 accessing it through physical modes 10 years back. And I'll just give you an example. How many of us believe that our phone number is part of our unique identity? Most people don't. If you poll people in this room, I'm sure very few will say that my phone number is a piece of confidential data, should not be easily available, I should not let people get a chance to impersonate me basis that number. But today you see in a lot of systems, discovery of an account is basis, it is supposed to be basis PAN and phone number. In a lot of places, just basis the phone number. If somebody has access to your phone and can access the OTPs or can hack the phone in some manner, then he's taken virtual control of everything. It's a risk for enterprises, but I think for the normal citizen to even start thinking of it like this is difficult. It just takes time. While all of us believe that PAN and Aadhaar and other citizen identity artifacts are more important, but a simple phone number or a simple email ID is part of your identity, and do people understand that? The second, I think, especially in the context of the business we do, the amounts of money we are dealing with are humongous now. They used to be of a certain scale 5 years back. That scale has almost tripled to quadrupled. Will it triple or quadruple in the next 5 years? And therefore, the risk management practices that we have, and I'm not talking of the AMCs, I'm talking of the RTAs, which process a lot of the back-end stuff. Our ability to authenticate investors, our ability to establish the correctness of the bank accounts, our ability to establish, the unique relationship between a distribution partner and an investor, between family members of an investor family, to be able to examine events like the passing away of an investor and to absolutely uniquely establish which means to do the transfer of units through. While all of this is a very well-oiled machine, what we see is that the hackers or the fraudsters on the other side are coming up with innovative means all the time. And a lot of them just understand the processes, the digital processes. Today it is next to impossible to kind of, impersonate through signature faking. I've hardly seen any cases where physical signatures have been faked. But when you take the OTP and phone number combination, through access of a few things, somebody else can take over your digital identity. And I think that risk, while it is well understood, it has to be understood a lot more. And the third thing I would say is that just from an organized, apart from identity, just from a data management, data breach, having enough control on the perimeter, making sure that we are screening our own employees well, because both exiting employees and entering employees do represent risks, which is understood. But a lot of things can go wrong even through our own employees, both the ones who are coding and the ones who are processing. The good news is that we've taken cognizance of these things. A lot of practices are in place across the mutual fund ecosystem. But it's also true that we've been trying to make things easy for investors. And therefore, at some time, I think the right balance between investor service and investor convenience, which means he or she should be able to do things in 1 or 2 clicks within minutes, and balancing security considerations, which means we give the convenience, but we kind of take care of security considerations. I think that's very, very important. In our own case, for example, there was a time we used to block all traffic coming from IPs which are based in certain countries. We would actually not take any case where we had ability to establish through geotagging that the person was not in India. But that creates a lot of angst. That creates a lot of angst amongst investors. There are investors at a certain age who have an old Yahoo Mail ID, which they have not accessed for 20 years, but they certainly want to access it when they want to invest with us. If you say no to a lot of these people, then it creates angst. You have flare-ups on Twitter, and nobody looks at the other side. All you see that an investor is inconvenienced. So I think achieving that balance between giving the investor convenience, making sure that the amounts of money we're dealing with are larger and larger, that citizens may not exactly understand that an email or a phone number by itself, it looks innocuous, and sometimes we throw the old SIM and buy a new one because the plan is cheaper. But we've actually given away a piece of our identity which is recorded in so many places. I think all of that has to be considered. And again, I would say that I'm not pressing the panic button here. It is well understood by the industry. But the amount of focus, the amount of investment we must continue doing, which we are doing today, I think that part is important.
Right. So Nilesh bhai, very briefly, what should we worry about? The same question actually.
So both Nithin and Anuj are digital native. I am digital 9. So my recommendation will be simple. Please don't create a digital age where there will be digital exclusion or there will be digital trapping. What do I mean by digital exclusion? While there is a 25-year-old kid who wants to use technology to invest in mutual fund, there is also a 75-year-old retired gentleman who probably wants to go to his distributor, have a cup of tea, talk about his investment, then invest into our fund. I have to create a balance where I am able to cater to both. Everyone doesn't have smartphone. Everyone is not digitally smart. There exists India as well as Bharat. My technology should be such that it can work in both the sides. What do I mean by digital trapping? Amarjeet bhai, abhi kuch din pehle, an elderly lady walked into our office and said there is a WhatsApp group on Harsha Upadhyay's name, who is Chief Investment Officer, Equity at Kotak Mutual Fund. And मैंने 8 लाख रुपए इन्वेस्ट किए because वहाँ पे ज़्यादा रिटर्न मिलता है. Now, obviously, this is fraud. Mutual funds, fund managers don't run this. But she was trapped. She was trapped into it. She came to invest another 18 lakh rupee. And we had to guide her. This is fraud. Please go and file police complaint. Every other day, we are filing complaints in cyber cell for people impersonating us. This digital trapping also needs to be ensured that it doesn't happen. Between this digital exclusion and digital trapping, I think we can survive.
Right. So I'm mindful of time, and what I'd like to do now is ask you some rapid fire questions. Answer has to be very brief, just one line or maybe 2 lines at the most. And this is common for all of you. So, we've all heard about mutual funds sahi hai, right? All of you heard about that. So, mutual funds sahi hai, lekin, can you complete the sentence?
Investors के लिए
इन्वेस्टर्स को और अच्छा समझ आना चाहिए.
Equities भी सही है.
So लेकिन भी सही.
Equities भी सही है. Because at the heart we are stockbrokers, so.
Okay, let me move to the next one. If I asked each of you to invest as an investor, right? So, index fund or active fund?
Index funds.
Active fund.
both.
One change that you expect from regulators, something on your wish list, which is on the top of your wish list, which will unlock more innovation, let me put it that way.
I would say make it easier for NRIs. NRIs today struggle to invest in India, and just making it easy will unlock huge potential.
It's not a copybook answer, sorry, so it's not a one-line answer, but I'll keep it short. I think I sometimes worry about talent, both for the ecosystem. Are enough people wanting to enter? Have we made it attractive enough? Can the regulator answer all the questions? The answer is no. But collectively, for the partner ecosystem, for the support system, and for the asset managers themselves, is this an attractive enough industry from a talent perspective, or should we work harder on it? That's a question in my mind.
Level playing field in terms of disclosure, in terms of investor protection, in terms of brokerage and commission, in terms of taxation benefits. Give us a level playing field, we'll go and compete with everyone.
Okay. So let me move to another investment question. So mutual fund schemes or NPS schemes?
Mutual fund scheme.
I'm invested in both.
Whichever is the best.
Can you elaborate?
So if I find my NPS team is better than my mutual fund, I'll go NPS. If my mutual fund team is better than NPS, I'll go mutual fund. As an investor, my dharma is to make optimum return on my portfolio, whosoever delivers the best.
Okay. So let me move to another, now it's a technology question. Use of blockchain in mutual fund transactions, revolution or rhetoric?
Yeah, I would say it's not a revolution, so I don't know how you'll use blockchain in mutual funds.
I think still a bit of rhetoric. Real deployment has not happened.
Not qualified to answer beyond my pay grade.
So I'm being told that I have to be mindful of time. So one last question, and if the organizers permit, maybe we'll take 1 or 2 questions from the audience. This one you can take more than 1 line. So your vision for mutual fund industry 2035, 10 years from now?
I would say at least 15 crore more PANs. So we are at 5 crore uniques. So at least 20 crore uniques.
I would say cover 50% of India in some form or the other and convert them into mutual fund investors.
Happy customer.
Good. So now, do I have time for taking 1 or 2 questions? Okay, one question, please. Yes, please.
Ladies and gentlemen, if you have a question, please do raise your hand. We'll have a microphone sent to you. Can we have a microphone for the gentleman in front?
Hello. Yeah, good morning, panel. So I feel very privileged to ask this question because my former boss and current boss both are here. Sir, my question to Nithin sir. You have been very vocal on adopting the open source technology and implementing like you have given the tech stack in public, Discourse, Listmonk, OSTKDR, Next, everything. So, have your approach been the same towards the AMC also, with all the regulations and everything? So, that's my question, one. And second question is, so what is the one thing that you will suggest the mutual fund industry to improve its digital outreach to take more direct acquisition in Tier 2 and Tier 3 cities? So, first thing is open source.
Yeah, so we run the mutual fund as a separate business. And with mutual funds, unlike in stockbroking, you can't really open source too much. I mean, mutual funds is more like a commoditized product in the back end. So not really. I don't see any open source tools that's being used for the mutual fund itself, because of fund accounting and all of that is kind of standard. As far as a mutual fund, growing the market is concerned, I think the industry is doing the best. So it will grow slow and steady. And if the market's doing well, we'll probably grow faster. If market's not doing well, we'll grow slower. But we are in the right trend.
And also the digital outreach. But one thing we can do to get more direct acquisition in Tier 2, Tier 3 cities.
Yeah, no, that's what. So in Tier 2, Tier 3, it's essentially growth. I mean, so it has to grow slowly. It has to be more top down. So as and when mutual funds become more and more mainstream, so you'll have Tier 3 also growing up soon.
So thank you very much. The time is up. Please have your questions later when we meet on the sidelines. Thank you very much for your patience, and please a big round of applause for this distinguished panelists. You did a great job. I wish I had a gift hamper to give all of you. Thank you very much.